What's up, everybody? Welcome back to the channel. Appreciate each and every single one of you, as always, for coming by and watching me talk about cryptos and what's going on in the news. Appreciate each and every single one of you. Now, in today's video, wanted to take some time. Over the past few days, the market, it's really just kind of been not as eventful as it has been in times past, but been paying attention to the main overall economic trends. And you know me, I like to look at things from a more big picture, long-term picture with a focus on that financial infrastructure and also utility. So there's some things that maybe you've already been up to date and may have noticed some things over the past few days, but I want to put together some pieces in the news, have some updates. A lot actually has happened with XDC over the past few days, so have some things I want to share with you with that, and also looking at some other options with interoperability. Not necessarily quant news, but I've was digging into some information that I know I needed to get this out onto a video to share this with others in case anybody else hadn't seen this. So we'll talk about some other potential technologies that may be, a competition there for quant, like I said. So let's just get into it. This news here I saw was released actually from today, that on Cointelegraph, real estate leads securitized blockchain assets in 2022. So being in the real estate industry myself, this is really exciting to see this just happening day by day by day. That's why we follow all of these projects like XDC, like LCX, like assets that are ALBT, assets that are bridging DeFi and traditional finance, XDC really helping tokenize out a bunch of different stuff. Now, this right here is just saying that 89% of all traded security tokens are for real estate, suggesting that blockchain may be primed for further adoption of real estate NFTs. Real estate is an asset class that's ripe for integration with blockchain tech. Security tokens cover many categories, but are dominated by real estate. The Cointelegraph research terminal is hosting a 33-page report. I don't want to read all that, but essentially it's going to be massively disruptive. Now, NFTs are a part of that. As we know, they're helping. That's really what a NFT is. They've been rising in popularity over the past few years and really skyrocketed in 2021. And real estate is just going to be a perfect breakdown. So this is actually, let me actually break this down. Breaking down the 89% further, residential real estate accounts for 87%, while commercial only takes up 2%. So this just shows you that if within a handful of years, and depending on what kind of legislation, now keep in mind really what is impacting the markets right now, and it looks like we're starting to get a little bit of a pump. It looks like the Fed's going to raise rates, though, any time now. They're meeting today and tomorrow, so that's really having an overall effect on everything. Legislation getting adopted. The European Union was voting on their MiCA law. If you missed that, I know you see here they were basically voting on whether or not to ban proof of work and certain types of really clamping down on that. Now, that didn't actually pass, but that's, overall what we're seeing right now. So depending on how the meeting with the Fed goes today and tomorrow, we're only going to see further adoption once those federal agencies hear from the president's executive order. Once they release reports within 180 days of that, that'll be September. We're going to see more by the end of 2022. Goodness, this whole space is going to look I mean, it's probably going to change more than it's changed just over the past year, and it's going to just grow exponentially faster. So real estate, residential tokenization is, just needless to say, going to just continue to just blow up. We'll be able to buy and sell houses with just a flick of a token, flip of a switch, whatever you want to say. And the whole process, though, and what people don't realize is that when you're buying a house, it takes so much. There's you see here an example is title searches, the process of insuring them. It takes time for the money, for the mortgage lenders to go through. I mean, it normally takes 30, 45 days. We got to order an appraisal. So all of this being able to just speed around, and also having the proof of ownership on, like the title on a blockchain, is going to make that way easier. Now, if you're watching this video, XDC is definitely going to be something in a coin that it is prime and ripe for that type of use case. Now, speaking of XDC, there's actually been some cool, now these are, I don't want to say minor use cases with that, but MetaBlocks here, this is the new Metaverse built on XDC. So now, I was a little irritated, I'll be honest, because I went through this whole thing, I got signed up, and apparently it's Metaverse here, built on XDC, it's people seeking authentic connections. I was like, awesome, I want to be one of these citizens. Count me in, let me go to this Eiffel Tower, you know? And I wanted to claim these tokens and stuff, and then they sent me an email and said, nope, sorry, you live in the United States, you're basically not allowed. So I can't really report to you guys on what it is, but they have a white paper here. I still think it's cool. I'll try not to let it make me feel sour about it. But maybe it's just because I feel left out. That's probably what it is. But I have the white paper here, and I'm like, look, anything that's going to be pushing the XDC, the Zenfin blockchain, I am all for. So I'll link this abstract here. I'm not going to read all 28 pages here on the camera. But they have a lot of really cool stuff. I mean, they're going to be doing virtual meetings here. You'll be able to, you see here, the global virtual events market size was valued at $94 billion in 2020. I guess that's like Zoom and all those types. I mean, I use, like BombBomb, email, this video communication. So they want to be able to have people meeting virtually, gaming, NFT, and we know NFTs are getting bigger on XDC. So that'll be really interesting. There's just a lot of use cases. Meta City developers, NFT holders, and we know like all of these different metaverses. This particular one, even though it's built on XDC, they have their own internal token called a block. So, I mean, I guess at some point though, you'd probably be able to trade like a certain number of XDC for a certain number of blocks. Gives you governance, voting rights, etc. So, feel free to dig into that more and stay tuned on that. Again, I can't give you exact details because I was not able to get into it. But, I mean, the graphics here, they were trying to really just give stuff away. So, it really, if nothing else, it shows the development here. It shows who they're partnering with. I mean, this is some good partnerships here that MetaBlocks has partnered with that they're developing on. Now, Cardano is one of the partners here as well. I thought that was interesting, but they have not as good or bad, but they have a lot of other big name folks as well. I didn't notice any other blockchain companies other than Cardano. So Switzerland Global Enterprise, yeah, I mean, I'd like to see more development. That just shows you they're moving along. They're developing things out. There's been some more developments. There was a hash bond launches on XDC, which is essentially like a centralized exchange. I was kind of digging around into this. Looks like they're a cross-chain decentralized exchange platform. So you can swap ERC20 for basically Binance Chain BEP20 tokens. And it looks like they're going to actually be able to deploy the hash token on the Zenfin's XDC network. So the deployment will provide users with benefits such as near zero gas fees and higher transaction speeds. So that you can see right there, the cooperation with Zenfin is a significant event and step forward for both ecosystems. The next step is the integration of the hash token into XDC, which we want to see. We want to see more ecosystems building that out, getting developed, putting things on their wallets. This is really exciting here. So they have further breakdown here. I won't get into all of that. You can look into that if you want to. I found this article too here. This is actually from Alyssa DiCaprio. She is actually the chief economist with R3. Now we know R3 uses the Zenfin, or we know that their blockchain, the Corda blockchain, one of the largest enterprise type blockchains in the world, using XDC as their settlement token here. Really, this article here, she was just talking about how things are changing. This is from a week ago or so, talking about trade finance and tokenization and really what we're going after. Now, we know this is a huge use case, and really even just like how much inefficiency there is in the overall process. and how much disruption there is for everything from digitization of certain trade instruments and documents all the way through tokenization of the whole process. Even that just in and of itself saving $1.5 trillion of in-demand capital across the industry that's just being rejected by banks to small and medium enterprises. So they're looking at expanding that and just increasing liquidity to the overall trade market. And especially, listen, you don't have to be, I'm sure if you're watching this video, you're paying attention to what's happening macroeconomically here. I mean, we're definitely, all signs indicating a global recession. How bad it is, how long it will take, who knows? We do know that crypto is one of those hedges. We know what the future holds. We know that this is the right space. We're just going to have to hold long enough. But it will have an impact. And so anything we can do in the global infrastructure to free up liquidity to people, it's going to be needed. And this is just another further little clue that I'm utilizing here. Just more people saying what we know is the obvious for the new open, inclusive global network. But I really just wanted to highlight this here, that she really kind of wrapped up and said, the different infrastructures being built around really the impact of digitization on the trade finance industry. However, it's not going to be felt instantly. With many businesses yet to become fully digitally native, even in 2022, the key to unlocking blockchain's true potential lies within plugging this technology into existing infrastructure rather than overhauling legacy processes entirely. So that is, we're not going to see just new systems all of a sudden turned on. We're going to see kind of a blending of the old and the new. So, that obviously is going to be, you're not going to see some of these older systems just all of a sudden just change over. We're going to see just emerging. And that's what we also really is seeing, interoperability and things connecting together. That really going to be a huge part of the future here and what's moving forward. Now, I wanted to share this as well, and we'll talk a little bit more about it here in a second, but I wanted to share this article here, Standard Chartered. Now, we know they're tied to a lot of these crypto utility companies here. I want to say they're tied to Ripple, crypto custodian to help clients earn yield on token holdings. So this is interesting, and this was from the 14th of March. So yesterday here, crypto custody startup spearheaded by Standard Chartered and Northern Trust is plotting new products aimed at generating yield for institutional investors. So they're really moving. This just shows you this is only furthering the rollout of these payment systems, these new payment rails, and how there's going to be multiple ecosystems. And there will be more shared liquidity between these different types of infrastructures and systems. Now, this particular one, their name is Zodia. I think, where he's here. They're going to be helping institutional investors earn their yield just by holding tokens. So they're wanting, you see here, just a sign off from regulators, just to let them do it here. Now, I'm not sure exactly where they're based here, but that is a big company. That's a really large company. And you see here, they've actually garnered attention because of the potential scale it could bring to crypto markets. The Chicago-based Northern Trust held $12.6 trillion in assets under custody as of December 2021. Standard Chartered, a London-based investment bank, operates in 59 countries and employs 85,000 people. So that is, those companies are massive. That's a lot of assets that, we're at a very small market cap compared to that, 1.75 trillion compared to just that one company having 12.6 trillion all under assets. So, boom. Now, moving on here, I found this little blurb here on Reddit, and I thought it was pretty cool to share, related to Hedera. Now, Hedera's been in the news, really just not really making, even though have had some announcements, nothing's really seemed to be happening with the price, but there was speculation that their NFT.com was going to be built on Hedera and would implement Hedera. And I saw this little kind of shout out here. It was kind of like, well, why does NFT not support Hedera yet? Well, they're saying our long-term goal is to actually aggregate NFT information wherever it exists. To begin, we start at the current hub of all things, NFT, which is Ethereum. the Hedera NFT ecosystem. Side note, I think the NFT ecosystem is going to thrive on Hedera. But the Hedera NFT ecosystem is very nascent, and it wasn't until recently that the smart contract 2.0 functionality was available. We're at the early stage of evaluating the best way to support Hedera NFTs from both data aggregation and supporting decentralized marketplace trading. So we don't want to replicate the current way NFTs are being traded on Hedera. Instead, we're focusing on making it seamless with NFT.com. So, they're wanting to say Hedera's got to be built out more. We don't want to just change or replicate the way they're doing it on Hedera. We want to have our own process. They just need to get their stuff, get their act together. So we'll see actually how that continues to play out. I'm still very bullish on Hedera long term, and I feel like they have a lot of stuff going on. And kind of wrap this up, I know we talked about Quant and different companies. Now, I'm not deep diving in really on an update with Quant in this. I just wanted to bring out a few, wanted to make note of some alternatives potentially that are making noise in the space here. And I was doing some research into a couple of them, Digital Asset being one here. Actually, their Settle is a partner for Regulated Liability Network for a blockchain protocol. So this is actually from February. And they've essentially, Digital Asset, which you see right here, Digital Asset is a company here who are really focusing in some of the very similar spaces to, different fintech companies that we cover on this channel, Quant. And so they're worth looking into and kind of digging into what they exactly are and who they're working with and what they're doing. Now, this article right here, you see, essentially Digital Asset has come together with big banks, some certain banks. Well, actually, I share an article about that. The RLN is to enable institutions to achieve true atomic settlement between tokenized assets, whether that's currencies for cross-border payment or settlement of tokenized securities. And that settlement for both central and commercial banks will be on a single network. And it's not to say that the RLN, which is the Regulated Liability Network, will be an island, but the goal is to develop one network. Now, this article here, you're like, what the heck is actually the RLN? This is actually from Citibank. Now, we know Citibank is a huge bank. Their big idea is to have a central commercial banks using a shared DLT for digital money format war. Now, this is from September of 2021. But in light of all the news happening with CBDCs and what Citibank is trying to do, it's worth keeping an eye on. This is where they are essentially trying to have their own payment rails, and they're already wanting to move money in a new way. Now, with that regulated liability network, it's just going to allow different banks. No one's going to truly own that. It's just another potential way to move large sums of money. Now, you see here both Settle and Digital Asset have their own blockchain, and Digital Asset has extensively partnered with VMware and its blockchain. We asked the Settle chief engineer Anthony Culligan if a decision had been made about which blockchain would underpin the solution, and he said there's different areas where we both excel. Now, you see here, this is interesting to note, Culligan outlined two of the areas where each stands out. Late last year, Settle did work to elevate its scalability from 30,000 transactions per second to 1 million. And so he says here he believes that the work is groundbreaking and could be a key contribution to the RLN protocol. So we'll be keeping an eye on that. And I'll just kind of wrap that one up by saying the statement Yavul Ruse, CEO of Digital Assets, said that interoperability is a major goal for us, and by working with Settle, we will produce a world-class network with the ability to connect and communicate across all existing client solutions to serve the regulated community. Now, this is definitely worth watching and paying attention to, especially if you're into the utility market. And Digital Asset, they're really, you can see here if you look on their website and what they're calling, let's actually just go here to their clearing and settlement, because this is what we talk about here a lot. Traditional clearing and settlement systems are stodgy, siloed, and fraught with risk for all participants. So they have a way, for what they're saying, that they're able to, bridge across different assets and networks together, access committed and simultaneous settlements to break each complex transaction into components, allowing for real-time settlement and asset locking. And again, it's unclear exactly whether this would be going after a similar market as like Ripple or global trade at like what XDC would be involved in. It looks like it's related to all of those. So it's a use case looking like it could be in the same space here. And then there was another one that's more like quant that I did a little bit of research into called Axelar network here. That's just kind of worth paying attention to. And again, I am not saying either of these. I'm not even sure with this digital asset here that there's even like a token you can even buy into. It's just simply worth being on the radar, because if you're going to invest in one technology, one vector, or one industry, you really need to pay attention to, I believe, others in the space. That's just my opinion. I really want to know what's going on, if there's any competitors going on. So that's worth keeping on the radar. Axelar, there is a token for this one. I'm not invested in it, and I'm definitely not saying go out and run and get it. But this is another, essentially they're calling it the Universal Overlay Network. It allows securely connecting all blockchain ecosystems, applications, and assets, and users to develop or to deliver Web3 interoperability. The security risks in interoperability are real, and they're claiming to do it in a decentralized way. So the Axel token is what makes the decentralization possible. So I guess they're trying to go after the idea of what quant would be. There you see at a high level, AXL is designed to help Axelar Network achieve 4 outcomes as a universal connector of blockchain ecosystems, and they're going to do it in a way that's security with decentralization, longevity, and a focus on ecosystem growth. Now, doesn't really show you a ton about that. You can, again, I will link the actual white paper into this if you did want to go and do some more research on that. I'll bring that up here. They have different ways of connecting. Cross-chain gateway protocol. They're tapping into the border gateway protocol, which is similar to how a lot of certain networks communicate and interoperate today currently, and they want to do it in a way that's a little bit more decentralized. So it's worth looking out. And again, I'm not saying that this is even something that could replace quant. I'm not a technical person down to the point where I know how to program, so this is literally, I'm looking at things as far as what are going to be the main layers in the future? How are they going to operate? Do we need to maybe look at investing in both? I believe in quant and things like that in the long term, but that's not to say that something in the short term couldn't pop up and be worth looking at involving. So leave a comment if you guys want me to maybe dig more into this. Video is getting a little long here, so I want to wrap it up. You could actually maybe just make a separate video about Axelar, or maybe dig more into this digital asset here to learn more about these things. So again, appreciate each and every single one of you guys making this video. I know it got to be a little long on this, but I wanted to just kind of cram a bunch of stuff that's kind of been going on the past few days that you might have missed. Hopefully you got a little bit some value out of it. And again, appreciate each and every single one of you. I'll see you in the next video.